Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of $86,681. That's made up of the 50,666 AUD in my stake portfolio and the $36,015 in my Vanguard Australian portfolio. Having a quick look through my holdings, you can see nothing particular has changed, and the only differences is I've been slowly growing into my Google position. If you haven't watched a video in a while, I did sell out of my JP Morgan position fully after I sold half of it, and that was around a month ago now. So I've done a few videos since then, but if you haven't seen those ones, this is how the portfolio is looking at the moment. And currently I'm up around 33% or $12,629 in my stake portfolio. And in my Vanguard portfolio, I believe I'm up around $5,500. So it's not been a bad time for many investors, as the majority of you have probably seen the S&P is up around 30% this year alone. So no matter where you've been investing your money, you're more than likely in the green. Today I wanted to go through my plans of hitting $2,000 next year in dividends. I also wanted to go through an $8,700 stock decision that I'll be coming up on, and a year-end wrap and my kind of plans for the ending of 2024 and what I'll be doing going into 2025. So starting off with my stake portfolio, I did mention I had a decision around a stock of mine that is quite big. So Microsoft is actually my biggest individual stock holding, so not an ETF. Obviously my VOO position is my biggest, that's followed by my VGS and VLC, that's in my Vanguard portfolio. But as an individual stock, Microsoft is my biggest exposure. And when I look at it as well, Microsoft is also a big player in VOO. It's also a big player in my VGS holding, which is my biggest in my Vanguard. So I have a lot of exposure to Microsoft. And if you've been an investor in Microsoft and looked over the last year, you can see it's only up around 10.5%. So not very good when you think that the overall S&P is up 30%. A 10% return in a year is still quite respectable over as an investor when you look at what the average returns are. But when you compare it to the S&P, you kind of hope for excess gains because you're taking extra risk by just being invested into one stock and not having that diversification. So getting a 10% return instead of a 30% return is a bit of a hurt. But when you take a bit more of a longer term outlook, Microsoft did have a very good year last year. So if we look here, this is when it started. This is January 2023. Traded all the way up and just kept going on this massive bull run leading up to January 2024. So last year was a really, really good year for investors. And then this year it's kind of cooled down a little. So the decision that I'm making is what I'm going to do with this Microsoft position. Do I trim it? Do I hold? Do I keep buying in as the stock prices come down? Or what do I decide to do? Do I reallocate these funds into another position where I have a bit more belief in? Or do I just keep things as they are and keep them ticking along? If you've watched my channel for a while, you know I'm a big believer in not making rash at the moment decisions, because the decisions I've made where I've lost or left the most money on the table are those split decisions where I decided to sell out of a position because I didn't have enough confidence in it and because it had a bit of a downturn or a negative time compared to other stocks in my portfolio. Overall, there's a reason Microsoft became the biggest individual stock in my portfolio, and that's because I had a really big bull case on it and I really believed in the growth of Microsoft and their really strong business model. If you look into Microsoft, they've got one of the best business models, and I always say Microsoft and Costco are my favorites in my portfolio pretty much when it comes to their business model, because Microsoft has so many recurring revenues where all their subscription services, and you look at Costco as well where they just hold, they don't actually sell a specific product necessarily, they can just kind of cycle through with whatever products is necessary at the time or that is in favor. So sitting on Microsoft at the moment means, again, I did have this down year and the PE ratio is quite high, sitting at 34 price to earnings. And then when you compare it to the likes of a Google, which is sitting at 21, which I recently invested into, or even Apple, which is sitting at a 37, you can see kind of the disparity in the tech stocks. That is why I decided to invest into Google, Google's PE ratio, like I highlighted, is 21. And a few episodes ago, I did do a video of me deep diving into Google. And since then, it's actually had a bit of a rough time with all the DOJ stuff about them looking to break it up. But that's another, I'll touch on that a bit later. But you can see it's down 5% this week. But overall, I think I'm going to just decide to hold on to my Microsoft position and just ride this out. If you're bullish on the stock, you can keep buying it at the moment. I still think it is a bit expensive. Maybe I should have taken some money here when you see it was around $460 a share. That was quite crazy. I probably should have taken some chips off the table, especially since the position is so heavily weighted. But I didn't. I held out, and you can see the last 6 months is down 3%, whilst the rest of the market is ripped. So that's the decisions you have to make and live with as an investor. That's why it's so important for you to be fully committed to your decisions. And if you're not going to be, then you probably shouldn't be actively investing. You should probably just have a bigger focus on ETFs and passively managed funds, things like that. Again, do your own research, not financial advice, but for myself, I know especially that is why this portfolio and both my portfolios are set up the way they are. VOO is purposely 50% of my portfolio, as you can see 53%, and that is because I don't believe I'm some exceptional investor, and I think it's very hard to beat the market long term. So if I can get at least 50% of my portfolio in VOO, it allows the other 50% for me to still, since I'm still young, I can invest that into companies I believe in and just try to get those excess to generate alpha. And I can do these videos on it as well. So that's another one of the decisions with this stake portfolio, is I quite enjoy doing these videos, giving updates, how the portfolio is doing, how different stocks are doing. And if I was just investing in ETFs, it would be a bit harder because it's much more meaningful when you're talking about stuff where your money actually is. So I'm not just sitting here speaking about stocks. I actually have real money sitting in these stocks and real conviction. Stocks have held for years. So this is my money as well at the end of the day. It's not just me giving my thoughts on a topic or a stock or an earnings or things. I have real skin in the game, as you'd say. Looking at my other portfolio, you can see my Vanguard portfolio slowly creeping up. It's now sitting at 36,000. It would be interesting to get this maybe to 40,000 before the end of the year. I actually have not invested any money. You'll see if you look at my last few videos, including this one, the stock portfolio value is stat the same for the last 3 weeks because I haven't put any money in actually. Just with how high prices have gotten, it's quite hard to find a good deal anywhere. Again, the S&P is trading at, I think it was, I can't remember exactly what the PE ratio was as an average, but it's well above the likes of Google and that, and it is quite expensive. But the goal would be still to potentially get this to 40,000, because that means I would clear the $90,000 mark before the end of the year. I can definitely do it. It's just if I decide I want to hold off, or if I want to invest these funds and put them into my portfolio, because you can get basically over 5% now just sitting in a bank account or sitting in other stuff, kind of waiting. But I don't want to be overly weighted to that because a 5% return over the course of a year isn't very good. But there is that risk-free benefit as well. So I'm kind of weighing it up, but hopefully I can get this to hit 40,000 before the end of the year. That'd be a big achievement for myself, and it would take it over 90,000 as we wrap up 2024. So you can see VLC, which tracks the Australian Large Companies Index, is sitting at just under 15,000. And that's 174 shares of it, and it's trading at $85.78. It's actually had a nice little run up. I saw it was at 83, then 84, now it's at 85, nearly 86. So Australian shares have been doing all right. Again, this is heavily weighted as well to just the biggest positions, and it's had a very good year, up 25%, because it has a lot of the big banks in it. For example, I used to work for a big bank, and the stock absolutely ripped this year. And if you look at any of the big banks, they're all up big. The only position in this that's really had a rough time, I guess, is its biggest actually, and that's BHP, because the mining giant has had a rough year. You'd know if you kind of track it or you follow any of the Australian stocks. BHP this year hasn't been the best, and that's why my dividend, which I'll speak on later, was actually smaller than usual as well, I believe, because BHP actually cut back on its dividend, the size of its dividend, around its earnings. So it was just something to keep in mind. But if you have a look at the last year for this stock, it was trading at 72. Now it's all the way up here at 85. So it's been a good year for equity investors, especially here in not even just here in Australia, in US as well, it's been a great year. So if we quickly go back here, you can see VGS, it's sitting at around just over 21,000 now, or 156 shares, and that's trading at $134. And this just tracks the biggest, it's like a diversified biggest companies around the world other than Australia, and it's up basically nearly 30% this year, pretty similar to how the S&P, it holds a lot of the similar companies, except it's just a bit bigger, and it's a few other countries as well, so it's a bit more diversified. And you can see if you have a look at the last year, the stock was actually trading around this 110. It's all the way up here now. I remember I was buying it around these 120 marks when I had a few dips and stuff, but it's recently just really picked up again and bounced back. So that's kind of how my Vanguard side of things is looking. I did want to touch on dividends. So my goal for next year is to hit $2,000 in dividends. So when we have a quick look at my Excel spreadsheet, you can see my dividends for this year so far is I've earned around 224 USD. Again, I've got some extra ones. This is just from January to October. I have got some again in this month, November, and then I'll get some again in December. But let's say that takes me to 240 USD. That's probably around 360, 365, whatever, 70 AUD. And then I got around $837 AUD in my dividends in my Vanguard portfolio, but I've actively been growing that bigger and bigger and bigger, so it's only going to keep getting bigger. And so together that's around $1,001 or close to $1,200, which isn't bad. But yeah, my goal is to get to 2,000 potentially next year, and how I plan to do that is my biggest dividend payer is my Vanguard portfolio, and I'm not a dividend investor. I speak on that a lot, that dividends are nice, but I just reinvest them. I don't take any money out of the portfolio. But as I grow my Vanguard position, my dividends will continue to get bigger. Even my stake dividends have gotten bigger. Like when you have a look at the chart here, you can see it slowly over time has gotten bigger and bigger. And I've actually sold out of a lot of my dividend paying stocks. So what you'll see is there'll be more of a trend to the quarters because of VOO. And because it's such a big position, it's so much bigger than all my other positions, it's kind of skews it. So at the moment, I'm getting around $50 a quarter USD, and that will only get bigger as I continue to reinvest and companies lift their dividend. And with my Vanguard portfolio, it's hopefully each month I'll be able to get it to around 270 or so. I mean, each quarter around $270 on average. As I continue to grow it, as like I said, I get it to 40,000. Next year I'll get it to 50,000. Those dividends should just come with it as well. So it's been good year-on-year growth. Like when you compare it, $160 USD last year to 224, and again that's with me selling out of a lot of my dividend stocks, and then $403 to 837. So a respectable jump over the year. And again, I'm not a dividend investor. My plan is just to reinvest all these dividends I get. The next topic as well I wanted to go through was just kind of giving a quick update on Google. As I mentioned, it's had a rough 6 months, down 5%. And if you look in the last week, it's down 5% again. And this was a position that I did recently put a lot of money into. As I sold out of JP Morgan, I shifted those funds into Google. Like I said, it's trading at a low PE ratio at 21, which is lower than the S&P. It's lower than all its big tech competitors. And that's because a lot of volatility is being priced into it around the potential of it having to sell Chrome. This is something one of my favorite finance YouTubers on here as well is going through as well, Joseph Carlson. I saw he also purchased into Google. I wasn't aware when I did my purchase as well, but it's good to see other investors going through the same thing. And his kind of census on it was he's not adding at the moment. He's just kind of waiting to see what happens. But I'm not selling either. I don't think this is a good time to sell. Again, it's trading at a lot cheaper than what its competitors are and what the market is. So I don't really see the point. And it's still a very strong business with Google Cloud growing, a lot of its other businesses growing. People are worried about search, especially with large language models like ChatGPT potentially taking away revenue, but that doesn't seem to be the case. Google still seems to be growing. They seem to be on the front lines as well of AI. So I don't see myself selling out anytime soon. And hopefully this can bounce back and be a real winner for me in 2025. It still had a good year this year, up 20%, which is better than Microsoft. But again, when you compare it to the S&P, it's down 10% compared to the 30% return of the S&P. So the extra risk you're taking of investing in an individual stock, you're expecting a higher return for it. And as well, I get a higher dividend from my VOO position. So kind of both sides of it. But that's why, like I said, I emphasize having a chunk of my portfolio in VOO, because whilst I think I can sometimes see and try to pick certain winners to generate excess alpha, there's a big benefit in just being invested into the overall market and just getting the broader returns as well. I'll give you a quick update on how things are looking as well. When you look at the Excel spreadsheet, you can see this is kind of how the weightings are. So VOO, it was actually 47%, and then I put more amount in and it's kind of returned well as well. So it's grown to 53. I wanted to get it to 50. So maybe my next investment will be into an individual stock, maybe Amazon, maybe Google. I don't know, we'll see. But yeah, that's kind of the plan for it. The reason why I'm also not putting into the US portfolio as much is because of the exchange rate. So previously, before, I could get a lot more bang for my buck, but this last year, 2 years, 3 years, it feels like my buying power's gone down a lot. So back then I was putting a lot more into my US portfolio, and I felt like there was less fees on my brokerage as well compared to now. So that's why I've been putting money into my Australian portfolio, because I can still get exposure to those US stocks through VGS. But I don't have to worry about as many fees, and Vanguard only charges a fee when you sell, and it's only a very small one, and it's nothing when you put in, so it's very good. So for that side of things, that's why I've been funneling a lot more money into my Vanguard portfolio, and kind of leaving my US stake one, but hopefully I can keep growing that one more. I do actually have a code where you get a free stock if you sign up for it, and so do I. I saw it was something I've had for ages, but I kind of put it in my thing now. If you ever use stake, you don't have to. You can do your own research into what brokerage you like, but it is there in my description. If anyone is interested, that is this dashboard that I have here, and this brokerage I use. So I use that and Vanguard just to be transparent. That's kind of my situation. But this was just a quick update on the portfolio. I wanted to mention the dividends. And kind of like, again, my year-end plan. I'll do a longer video at the end of the year, kind of my plans for the upcoming year. But the goal I've mentioned is get to $2,000 in dividends next year, and then hopefully hit $100,000 in the starting part of next year as well, as I aim for $90,000 before the year end. So that's all for now. Thank you for watching. Cheers.